What else?
You want to dive into the Biden's plan?
Yeah, let's
All
talk
right,
about that.
let's talk about it.
All right, let's pull up that link so
Sure.
we have that link up, and we can review that policy. Let's just get you to read off exactly what Bloomberg said.
Okay. So here's the part where they're talking about the plan, right?
Okay.
So I'm just going to highlight that right there.
Sure.
The plan would target a provision for avoiding capital gains tax on property sales to raise cash for childcare and elderly services, known as the like-kind exchange. The tactic allows investors to roll the proceeds of real estate sales into future purchases, shielding investors from taxes on their profits.
Okay.
So that's kind of what it does.
Okay. So
yeah.
like-kind exchange is in the industry term, like not the layman's term. That's the layperson's understanding of it. What we know it in the industry as is the 1031 tax exchange. And what that does is it allows us to sell the asset, hold that money in an account to find another asset to roll that capital into that's not going to be taxed at all. And what this policy actually does, like, some people might think if you're against this, then you're against extra child care and elder care. Well, honestly, it's not the case. So what happens if you're going to tax people on asset, like when they're going to sell their assets, and they're going to be taxed at that rate, and they can't get to the next asset with the capital that they anticipated, they will not sell as quickly and for as much money. Okay, so this affects not only the top end of the buyers, but the entry point too. So if you're buying a duplex and you hold on to it for 5 years, you improve it, you collect the rents, you do everything that's involved in keeping a good property. When you go to identify the next property and you want to unload the current property, about 20% of your profit is going straight to Uncle Sam. Now, when you have to let that amount of money go, you really evaluate if you want to make that move and then what you're going to pay for the next property moving up. So this has a big trickle up effect. And really, when you compress growth, when you actually compress the growth of the economy in this way, your projections on what's going to be coming in is always going to be less than projected. In my opinion, there's no way you can accurately project people selling off their investment properties, giving the government a percentage of that, and be accurate on the projections of the income that you need from it. Does that make sense?
Yeah, that makes sense to me. But so the way that I took this, right? So he's making money on basically the back end of these real estate deals, whereas 51 billion that they're avoiding. Well, I say avoiding in taxes. It's more of just like the way that you play the tax system.
Yeah.
So they found a loophole, right? It's 51.
No, they created the loophole.
Yeah, they created it, right?
Yeah.
So there's this 51 billion, but like, if
it wouldn't be 51 billion if this was in place.
Right, because they would like reevaluate what they're doing. So that 51 billion might turn into something
10
like
billion.
10 billion,
Yeah.
right?
So then you've got a big shortfall.
Then you can't accomplish the things that you wanted to anyways.
Right.
Right? And then they're just going to try to find a different, like either loophole or they'll try to create something to where they can get around this,
Yeah.
right? So to me, like in theory, it's great, but I feel like it would just fall off over time, right?
Yeah.
Am I wrong
they
on
would
that?
always be short.
Yeah.
They would always be short on projections. Well, for the last 5 years, they brought in 51 billion. Okay, well, let's adjust that. Well, then they're going to show up in another 5 years. Why didn't we get 51 billion?
Yeah.
What happened to that 51 billion? It turned into 10. And you only got a small percentage of what you thought. So then you really put them in a bind.
Then there's the other fact where it's like, okay, what if for some reason the real estate market was to crash? This would come to a halt, and you might not even get 10 billion.
This would be one of the reasons why it would crash.
Probably.
I mean,
I could see that happening.
This is a component of people that have done the right thing over time, saved a bunch of money, can get into an investment property, and here's the thing, is you are getting taxes based on the rent you collect. the gross rents that you collect minus your expenses, the government taxes you on that number. So if you're making $500 profit on your rental, you're going to have to pay taxes on the $500 depending on what your income is. That's going to be associated with your overall gross income minus your expenses to the government, and then you pay taxes on that. So this is a big detriment to the economy overall, in my opinion. I don't agree with this policy. I don't want to dive too far into politics on this show, but when it comes to policies that affect growth and real estate sales and the overall general economy, then we're going to talk about it. And this is one that I adamantly disagree with. This is not a policy that anybody should be in favor of. What needs to happen is more job opportunities, less taxes on small business. Those things help generate more tax revenue in the long run, in my opinion. So I think there's a stat out there that said when the tax cut came in 2017, the Treasury actually saw an uptick in money sent in. That's floating around out there that nobody's reporting on, is the surge of money coming into the Treasury went up when the tax rate went down. So that's an interesting thing.
Yeah. So this is a point that I just highlighted right here, right? So this is why this even was brought up, because 2021 to me seems like it's going to be a rough year.
Yeah.
Because there's been a lot of money pushed into our economy, so that there's a lot of cash floating around right now, and then there's going to be a bunch of holes that we need to fill for COVID-19, which is why this was brought up. So I would be very interested to revisit this topic after the election.
For sure.
To figure out what the next administration, Biden or Trump's administration, doesn't matter. I'd be interested to see what they say. This is Biden's solution, but I don't think it's going to work.
Here's a stat that I thought was really interesting, is a lot of people's mortgage liability right now is less than 50% of the value of the home. A lot of people are in financially stable positions with their housing. Mm-hmm. So if a tragedy does come up, they might have access to that equity to survive. There's a stimulus package for most people that are homeowners right now, because they're in very solid positions because of the amount of equity that has been paid down and the increase in value, just because of the housing market being in such high demand right now.
Right.
So very interesting. I disagree with this policy. I'm definitely against this policy. This does nothing but contract value, and this does nothing but slows the opportunities for people to go from one investment product to the next investment product, if they so choose, And, like I said, the tax revenue that's coming in from the rents, I'm all for that. I subscribe to that. I do that. The rents that I collect on my own personal investments, I'm happy to send my portion of that to Uncle Sam.
Yeah.
So yeah, that's our take on that. We disagree with that policy.
Oh, yeah, we're going to put the links to these articles in the description, so that way people can see what we're talking about.
Exactly.
This was just one that was found on Bloomberg. I'm sure if you just look this up, let me scroll back up so that way people can see the title.
And honestly, this is a unbiased to Joe Biden article. This is just the facts. This is a left-leaning source, to say what's going on.
Yeah, I mean, I think that at the bottom it kind of gets into more. You can kind of hear the person who wrote this article. You can kind of hear their opinions on it. But every time I look at this, I always just pull what they're talking about out instead of listening to what they're saying. I do read what the journalist is saying, so that way I can get someone else's perspective on it. But I always pull out the facts and then just focus on that and then make my own decision based on that. It's usually what I do whenever I'm reading these articles.
Sure.
But yeah, everything we're going to talk about today that has an article, we'll link into the description.
Cool.
But yeah, I don't really know if actually, if anyone can find an article that disputes what we just said, I'd be super happy to read it.
Yeah.
And then evaluate that as well. Because this is just from one person's opinion. It could be completely different, and there's something else that like backs this up
Right.
to where this does work.
Yeah.
But just based on reading this, it doesn't seem like it works.
No.
To me.
Yeah.
But
This feels like a detriment to the economy, even though the intent of the thing is nice. It's just not a practical way to go about it. You know, if you want better childcare, then more people have to have opportunities to pay for the childcare that they need. You know, there needs to be support for that.
okay. So yeah, that's what we've been talking about.